The March 31st tax filing deadline has passed already, and the penalties have started running if you have not filed yet. But here is what most Nigerians do not know. Late filing is not the end. There are things you can do now that can limit your exposure. The new tax laws actually has more relief than most people realize. Today on Lex Nigeria, we are going to break down the new Nigeria's tax laws, what you owe, what you can do now that the deadline has passed, and what your options are going forward. I'm Olaiton and this is Lex Nigeria, where Nigerian law meets real life. Let's get into it. On 26 June 2025, President Bola Ahmed Tinubu signed four tax reform bills into law, the most ambitious overhaul of Nigeria's tax system in decades. Are the Nigeria Tax Act 2025, the Nigerian Tax Administration Act 2025, the Nigeria Revenue Service Establishment Act 2025, and the Joint Revenue Board Establishment Act 2025. These laws repealed and replaced the Personal Income Tax Act, the Companies Income Tax Act, the Value Added Tax Act, the Capital Gains Tax Act, and several others, essentially rebuilding Nigeria's entire tax framework. They took effect on January 1st, 2026. The Federal Inland Revenue Service (FIRS) has now been renamed the Nigerian Revenue Service (the NRS) under Act No. 4, Section 3. We have three things to cover today: what you owe, what happens now that March 31st has passed, and what your next steps should be.
What the law says you owe. If you are a salary earner, the fourth schedule to the Nigerian Tax Act 2025, read together with Section 58, set out the new income tax rate. The first 800,000 naira of your annual income is taxed at 0%. This is confirmed from the primary source. If you earn 800,000 naira or less per year, roughly 66,667 naira per month, you owe no personal income tax. Above that threshold, rates climb progressively: 15%, 18%, 21%, 23%, reaching a maximum of 25% on income above 50 million naira annually. Under Section 30 sub 286 of the Nigerian Tax Act 2025, you can also claim a rent relief of 20% of your annual rent paid, capped at 500,000 naira when computing your chargeable income. This means that you have to keep your rent receipts because the relief for rent is real and it is in the primary statute. If you are a freelancer, or you run a digital business, or you are self-employed, you are required to register for a tax ID under Section 4 of the Nigerian Tax Administration Act 2025, and you are to file annual return under Section 13. This applies whether you are a content creator, a consultant, a trader, or a market vendor. If you earn income in Nigeria, you are in the tax net. If you own a small business, Section 56 of the Nigeria Tax Act 2025 exempts small companies from companies income tax entirely at a rate of 0%. A small company is defined in Section 202 of the same Act as a company with annual gross turnover of 50 million naira or less and total fixed assets not exceeding 250 million naira. Note carefully, professional services firms are excluded from this definition regardless of turnover. On VAT, value added tax. Section 148 of the Nigerian Tax Act 2025 maintains VAT at 7.5%. However, Section 187 charges a range of essential supplies at 0%, including supplies like basic food items, all medical and pharmaceutical products, educational books and materials, medical services, and medical equipment. These are not exempt. They are zero rated, meaning suppliers can still recover VAT. Input VAT, by the way. The second part of today's episode, the deadline has passed. What now? The personal income tax filing deadline was 31st March 2026, save for states like Anambra and Lagos that their one was extended. That's passed. And guess what the law says? Section 101 of the Nigerian Tax Administration Act 2025 is clear. Failure to file returns attracts an administrative penalty of 100,000 naira in the first month in which the failure occurs, and 50,000 naira for each subsequent month the failure continues. This applies whether you fight nothing or fight something, or when you fight something that is incomplete or inaccurate. The meter is running, but late filing is still significantly better than not filing at all. Every month that you delay your tax filing, you add 15,000 naira to your liability. So fine now, pay the penalty and just move forward. Section 105 of the Nigerian Tax Act Administration Act 2025 provides that you are required to withhold that if you are required to withhold or deduct tax such as pay as you earn and you fail to do so, you face a penalty of 40% of the amount not deducted. And this is for employers. Section 107 of the Nigerian Tax Administration Act 2025 deals with failure to remit. If you deduct tax but did not pay to the relevant tax authority, you face a 10% per annum administrative penalty on the unremitted amount, plus interest at the prevailing CBN monetary policy rate. What should you do right now if you miss the deadline? First, file immediately. A late return with a penalty is far better than no return and a compliance
Second,
investigation. If you genuinely cannot pay the full tax due right now, the Nigerian Tax Administration Act provides for arrangements with your state internal revenue service or the NRS. Third, keep every record that you have, your pay slips, your rent receipts, your pension deduction, all of it. Documentation is going to be your defense if you are ever audited. The third part of today's episode, the enforcement reality. Here's what makes 2026 different from previous years. The Nigerian Revenue Service is now equipped with digital systems to cross reference payroll data, bank transactions, and tax filings under Section 4G of the NRS Establishment Act 2025. The NRS has statutory power to identify, trace, freeze, confiscate, and seize proceeds derived from tax fraud or evasion. Section 39 of the same Act empowers the Accountant General to deduct unremitted revenue directly from government agency budgets on a warranted basis. No lengthy court process for government bodies. And under Section 61 of the Nigerian Tax Administration Act 2025, the NRS has power to distrain, meaning seize assets of a tax debtor who defaults on payment. The era of nobody is checking me is over. If your account receives money regularly, if you use fintech platforms, if you sell online or run any digital business, you are visible to the tax system. The only question is whether you are visible in compliance or in violation. Let me be clear about what this reform is actually trying to do. The 800,000 naira 0% threshold protects low earners. The small company exemption at 50 million naira turnover protects genuine small businesses. The zero rating of food, medicine, and educational materials protects everyday Nigerians from VAT on essentials. This reform is designed to bring high earners, large corporations, and previously on-track digital businesses into the system while reducing the burden on those who can least afford it. The framework is actually progressive in design, but progressivity on paper means nothing without compliance in practice. The law rewards those who engage with it honestly and punishes those who ignore it.
here is your takeaway. Four new acts govern Nigeria's tax system from 1st January 2026. We now have the Nigerian Tax Act, we have the Nigerian Tax Administration Act, the Nigerian Revenue Service Establishment Act, the Joint Revenue Board Act. If you earn below 800,000 naira annually, you pay zero tax, but you must still file. And if your company's turnover is less than 15 million naira, you are exempt from company income tax, but you must still file. And if you missed the March 31st deadline already, the penalties under Section 101 of the Nigerian Tax Administration Act have started running. File now, keep your records, and know what you owe. I'm Ola Eton. This has been Lex Nigeria. See you next week.